Forex.telegram. 20 Forex trading tips for a beginner. Since the beginning of Forex trading, many inexperienced traders have lost a large amount of money. There is no need for you to be one of the losers. To avoid disasters on the Forex market and maximize your potential, here are 20 Forex trading tips. 1. Be self-aware. Decide what level of risk you are comfortable with as well as your needs. Trading profits depend on knowing the markets. Knowing and recognizing yourself is the first step in recognizing the markets. Getting to know oneself first requires a thorough understanding of one's risk tolerance and capital allocation to Forex and trading. Trading Forex requires careful study and analysis of your own financial goals. 2. Decide what you want to accomplish. Plan ahead. Trading career goals must be systematically defined along with a working plan and a time frame. How would you define failure and success? Obviously, trial and error will be an essential element of learning, but what is the time frame for that? When it comes to trading, how much time do you have available? Is your goal to become financially independent, or are you merely looking to generate extra income? In order to successfully trade, you must be able to answer these and similar questions. If the risk/return analysis shows that the endeavor cannot be profitable, having clear goals makes it easier to abandon it. 3. Be careful when choosing a broker. In spite of the fact that beginners often overlook this point, the choice of broker cannot be overemphasized. All the gains that can be made through hard work and study are invalidated when a fake or unreliable broker is used. Furthermore, you should ensure that your trading goals and expertise level match those of the broker. Is the Forex broker trying to reach a particular type of client? Are you satisfied with the trading software? Does customer service work efficiently? It is essential to examine all these factors before even attempting to understand the complexities of trading. 4. Based on your needs and expectations, choose your account type and leverage ratio. Furthermore, we should choose an account package that is suitable to our expectations and knowledge level in continuation of the above item. It can be confusing at first to choose between the different types of accounts offered by brokers, but generally, lower leverage is better. The standard account is suitable if you are familiar with the concepts of leverage and trading in general. Beginners must use a mini account for study and practice if they're not yet experienced. When it comes to making career choices, you should be cautious, especially at the beginning of your career, as the lower your risk, the better your chances. 5. Don't increase your account size by depositing more money, but by growing your account organically. When beginning, the absolute best Forex trading tip is to start with small amounts and low leverage, and increase your account as profits accrue. A larger account does not guarantee greater profits. Your trading choices may allow you to increase the size of your account. If not, it wouldn't make sense to keep adding funds into an account that is constantly losing money. 6. Focus on one currency pair at a time, then expand as you gain more experience. There is a lot of complexity and depth in currency trading, since the markets are chaotic and the participants have diverse characters and purposes. Trading with a currency pair that we understand and are familiar with is the best way to master all the different types of financial activity that occurs in the world. Trading your nation's currency can be a great way to get started. Beginners and advanced traders can also benefit from sticking to the most liquid and widely traded pairs. A trader should also always follow major currency pairs news and rates. 7. Take action based on what you understand. Many traders have failed because they didn't abide by this simple principle. Do not trade if you're not confident about your knowledge and your ability to defend your opinion if criticized by someone you respect and trust. Rumors and hearsay should not be relied upon when trading. Make sure you understand both the positive and negative effects of opening a position before taking action. 8. In a losing position, do not add. It is common sense, but ignorance of this principle, or carelessness in its application, has led to many trading disasters throughout history. It is impossible to predict the direction a currency pair will take over the coming hours, days, or even weeks. Many educated guesses have been made, but it is impossible to predict where the price will be in a few weeks. As a result, the only certainty about trading is the present moment. The future cannot be predicted. A losing position can't be added to, unless you're a gambler. As long as it is managed according to the original plan, a position in the red can survive on its own. However, adding to it is inadvisable. 9. Keep your emotions in check. There should be no room in traders' calculations for greed, excitement, euphoria, panic, or fear. In spite of this, traders are human, so at the same time we must find a way to manage and minimize the effect of these emotions. As a result, traders are always advised to start small. Our trading choices will be less influenced by emotions if we reduce our risk, allowing us to achieve our long-term goals. A successful Forex trading career requires a logical approach and less emotional intensity. 10. Observe. Make sure you study your successes as well as your failures. Developing trading strategies or analyzing price trends does not constitute an analytical approach to trading. Beginning from the first dollar invested in an open position, to the first mistakes in calculations and methods of trading, it begins at the very beginning. In order to learn what works and what doesn't, a successful trader keeps a diary, a journal of his trading activity. A good mentor will teach you this important Forex trading tip. 11. Make your trading as automated as possible. Earlier, we discussed how emotional control is crucial for a successful and lucrative career. Automating trading choices and trader behavior would be a good way to minimize the role of emotions. With a Forex signal trading site like Telegram.forex, this is not about using Forex robots or buying expensive technical strategies. All that you need to do is to make sure that your responses to similar situations and trading scenarios are themselves similar in nature. In other words, don't improvise. Let your reactions to market events follow a studied and tested pattern. 12. Be wary of Forex robots and miracle Forex trading tips. It is surprising to see that these untested, unproven products are so popular today, generating high profits for their sellers, but little for their eager and hopeful buyers. It is actually quite easy to defend yourself against such magical items. With the benefit of their inventions, let the geniuses behind these tools become millionaires. If they aren't successful in doing as much, you shouldn't be either. 13. Simple is best. Analyzes and trade plans should be easily understandable. The art of Forex trading is not rocket science. Currency trading does not require you to be a mathematical genius or a professor of economics. Clear vision, well-defined goals, and carefully observed practices are the best paths to a respectable career in Forex. The key to achieving this is to resist the temptation to over-explain, overanalyze, and most importantly, rationalize your failures. It does not matter what caused a failure is still a failure. 14. If you don't have the patience and financial resilience to stick with a long-term plan, and pay attention to the Forex trading tips. Trading against trends or picking tops and bottoms by wagering against market momentum is never recommended for beginners. Relax your mind by joining the trends. If you refuse to follow the trends, constant stress and fear will destroy your career. 15. Be aware that Forex is a game of probabilities. Probability and risk analysis are key components of Forex trading. Profits cannot be generated consistently by any one method or style. In order to succeed, we must make sure that our losses are harmless and our profits multiplied. Risk management and probability understanding are essential to achieving such a positioning. 16. Embrace humility and patience. It is not a good idea to fight the markets. If you can't eliminate your failures completely, try to accommodate them. Do not allow yourself to think that you have somehow acquired the alchemist's stone of trading. Eventually, such a mindset will ruin your career. 17. Be yourself, share your experiences. You should be the one who makes the decision regarding the markets, even though it is a good idea to discuss your opinions with others. Make your own choices based on your own research and consideration of others' opinions. After all, it's your money. 18. Learn about money management. As soon as profits are made, it is time to protect them. A money manager's goal is to minimize losses and maximize profits. 19. Market fundamentals, technical factors, and technical indicators are important to study. Traders with experience will not be surprised that we've placed this item so low on this list. Accounts that have been wiped out are rarely the result of faulty analysis. A career that fails to start will not be destroyed by incorrectly applying or understanding fundamental or technical studies. For beginners, money management and emotional control are far more important than analysis, but once those issues are overcome, and steady gains are realized, A successful analysis of markets will provide a tremendous advantage. 20. Keep going with Forex trading tips. Persistence and the determination to succeed are great advantages, provided you risk only what you can afford to lose. Unless you are born a trading genius, there's little chance that you'll become one overnight, so don't give up before your skills and talents mature. You will not experience any pain during the learning process so long as your plans for the future in your daily life are not derailed by the amount you risk. If you need further Forex trading tips as you begin the process of trading Forex, look no further than many of the other blog posts on telegram.forex. Be sure to sign up for an account so that you can begin growing your portfolio through engagement in the foreign exchange markets. Please like, share, comment and subscribe for more. Thanks for watching.